Welcome back. You're watching Trading Hour here on CNBC-TV18. The markets are seeing a bit of a pullback after making a newer high. Maybe those people who are still waiting on the sidelines are looking to buy the dip. But now, since we heard a domestic voice, let's get you a global opinion now on the market. Stefan Hofer, the Chief Investment Strategist of APAC at the LGT Private Bank, is joining us this morning. Stefan, good morning. Thank you so much for joining in.
Morning.
The global markets are doing fairly well for themselves despite the hot inflation print that we saw in the US on Friday. What's your take on the global markets, particularly the US? Goldman Sachs just overnight raised their target on the S&P 500 to 5,200 now. What's your call there now?
Okay, so I think you'll recall last year there was this huge debate about the extent of the US slowdown, hard landing, soft landing, and so on. And part of that sort of conversation is this idea that US inflation really has to decelerate quite nicely, and that will then allow the Federal Reserve to start cutting rates in June of 2024. What happened last week with regards to the CPI print is okay on the margin, but it's a tiny red flag. And if we have more of those kinds of CPI prints in the coming months, then things will get a lot more complicated. So that will then delay the timing of the rate cut, and that is something that we can argue most investors are not banking on right now. So basically, long story short, there's no cause to panic over the CPI print, but disinflation has to continue further in the United States to get that rate cut.
Stefan, hi, good to have you on the show. Despite all of this uncertainty and the market wondering if it is correctly second-guessing the Fed or not in terms of when the first rate cuts will happen, the fact is that equities continue to rally. I mean, the S&P 500 has managed to cruise past 5,000. Here in India, we're making fresh intraday. I mean, we had a fresh all-time high just now, about half an hour back. So what is your sense? I mean, is this kind of equity strength likely to continue in the foreseeable future, next few months?
We're okay for now. I think as we approach maybe sort of early summer, then geopolitics will rear its head, especially with regards to the US election. That's something that is maybe a little bit premature to spend too much time on it right now. But for the time being, it's all about earnings, the earnings season, of course, which is ongoing, and essentially still watching those CPI prints come in. And at the end of the day, it's still very, very strong U.S. labor market, which is sort of like a backstop or a bit of insurance that we have against a massive slowdown in the U.S. So in the current setup, I think we're still okay. With regards to India, I mean, at the end of the day, it's growth, and more growth. India is expected to grow 6.5% or more, the GDP that is, this year and next. It's very, very difficult to find an economy of that size doing that well in the current environment. So international money will continue to pile into India, we believe.
I was just going to come to that. So, I think you have a view of moderate gains continuing in India in 24. Just in terms of the portfolio allocation, when you're talking to your client base across APAC, is it the same as 2023, or are you increasing allocation to India? And where's China in the mix with that sort of whole elusive, return to China, thesis?
Yeah, exactly. So, basically, for a lot of investors, even across the region, I think it's safe to say that they are historically underinvested in the Indian market and are now really sort of paying attention. And I can say, in over 20 years of doing this kind of work, I've never seen so much independent client interest in the Indian market as I have over the last 6 months. And I really think that boils down to this phenomenal growth story that India presents today. So international money is really waking up to the India story. Now, the flip side of that, of course, unfortunately, is what appears to be a structural downshift in China's growth, maybe between 4 and 5% this year and next. And so you have this discrepancy between the two markets. That is not to say that there aren't pockets of value in China as well. Your previous guest talked a lot about valuation. Valuation in China is extremely cheap. And maybe we cannot say the same about the Indian market right now. But in the current environment, it's really more about the hunt for growth. And in this perspective, India does shine.
But is that valuation question come in that conversation that you've been having with your clients, Stefan? You said there are pockets of value in China, but are those funds moving there, or are funds that were earlier allocated to China coming in towards India because India is doing well and considering the underperformance that China has had so far?
I think there's a bit of wait and see, at play there as well. So, I mean, there's a huge amount of anticipation on the policy front in China, whether there's an announcement on fiscal policy or housing market, supports, or on the monetary policy side, even and on bank lending and so on. So I think what you can expect when the valuation is this low, that if you get an outsized policy announcement, the China market can really roar back to life. So I think we need to sort of temper that a little bit. But that could be, then you can have questions about the sustainability of that kind of a rally. India, the conversation is different.
Sure, Stefan. So just to round it up, until we get that massive policy boost that can change the fortunes of the Chinese market. So just to round it up for India, what are you telling people to buy here?
For the vast majority of clients, broad exposure is more than ample. So we're not doing a lot of sort of sector bets and this kind of thing. Really getting investors comfortable with the market as a first step. That basically means broad exposure. That's more than adequate for now.
Okay. All right. Stefan, thank you very much for joining us today and speaking to us. Great perspective, as always. Appreciate you making the time. Well, that is a view from LGT Private Bank, LGT Wealth coming in. We'll take a break on that note. On the other side, we'll go back to talking individual stocks. Lots of news flow, lots of stocks that are flying around. We'll put the spotlight on some of them.